Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago wheat. The two core patterns of recent moves originated from about 12 weeks ago, when I put forward an old technical analysis technique, but one which I recalled worked well in the grains earlier this decade, back during the start of the Russo-Ukrainian war. It was doubling, tripling, or even more of bull channels. In this case specifically, the late January to mid-February bull channel, which doubled and tripled up, provided some guidance as prices zigzagged their way higher. This week prices are back down to the original bull channel, just below it actually, moving down under what had only recently been the 50% Fibonacci line, the March 24 to May 25 move at 651. That had been a key level. Looking a little further down, we have the 50% Fibonacci on the May 24 to May 25 move at 622.25, which we're testing right now, which has near it the now seemingly flatlining green short medium moving average also being tested, currently at 624.75. Additionally, 2 weeks ago I drew a steep bullish Andrews pitchfork for the recent moves, which has been finessed today into the bright red mid-April to early May bullish shift pitchfork. It was, as I said 2 weeks ago, and I quote, "This is a first effort, very recent pitchfork, and I'm quite prepared to finesse this to a shallow bullish shift pitchfork or retire it altogether," end of quote. Well, since then I've retired the more acute, I should say, bullish Andrews pitchfork, and we are now just have this bright red bullish shift pitchfork, but we are right now moving down through the lower tine of that one, which is at 626. And we may be well on the way to retiring this bright red pitchfork as well. If we do, then I'll be on the lookout for what could be the next pattern move here, and I have some ideas on that already from other markets in the grains. Finally, I'd like to go back to something I spoke about 13 weeks ago and ever since, and I quote, "Then there's my final point. It's again something I saw from my longer term monthly charts earlier in January. It is a May/July 23 to date bear channel. The lower bear channel line is below the bottom of my daily chart. The upper bear channel line is closer today to the market." Well, actually, that's currently at 604, and that's the end of the quote. Well, we've tested and tested the upper bear channel line since the beginning of March, piercing it and eventually managing to close over it at the end of April, and look right now likely to do the same in May, despite the pullback lower seen these last 2 weeks. This brought to mind something I had seen in the oilseeds and veg oils, and it was worth it to look at the whole January to day action as one leg of a possible bullish halfway hesitation. I had thought this one to be a valid case, but this week, as prices are heading lower again, I'm starting to have some serious doubts. Nevertheless, last week I had put forward the following targets topside for such a pattern. Primary target would be up in the 652 area, a level we've already reached. For secondary harder to reach target X1, up in the 701 area. Now this had looked good as a pattern idea as long as prices can stay above that upper bear channel line. But we do have some interesting resistances in the way should we go higher, notably the 50% absolute Fibonacci line at 682, which has been tested but which has also held down the market. So please continue to watch this market carefully, especially as the market tries approaching that breached and possibly broken now upper bear channel line, and also the bright red lower tine. A lot depends on this. Chicago corn. The key pattern here is once again the August 25 to January 26 dark blue bullish shift pitchfork. However, we are right now breaching below the dark blue lower tine, currently at 457.5. We seem to be doing it with a possible new bearish pattern formed since mid-April. Prices are right now also testing the mauve medium moving average, which is currently at 456 even, as well as approaching the nearby lower trendline extension, currently at 453.25, and that's of the July 23 to January 24 descending triangle. and testing the 50% Fibonacci over the whole of the 2025 move of 454 3/4. So there are some significant supports being challenged today. Additionally, overhead, the green short medium moving average, currently at 468 even, which had been acting as a support, is not, if not a perfect one, is now seemingly acting as a resistance. It is, as I said last week, and I quote, "The most important single thing is, will the market continue to maintain itself, and also how well it maintains itself within the dark blue bullish shift pitchfork, the showrunner for this market." End of quote. Right now that pattern is being questioned, and being questioned by a new mid-April to date pattern, a possible double top for bright red neckline, currently at 464 1/4. We have not had two consecutive closes underneath it, but the depth of the move lower, especially today, has prompted me today to start laying out some potential targets. Only potential targets now, but potential targets below for this possible double top. Thus we have a primary potential target down in the 454 zone, a target which we have already reached, just about, and a secondary harder to reach potential target X down in the 440 1/4 zone, close to the November 2020 high at 439.5. But perhaps most interesting, under the now rising gold long moving average, which is currently at 447. I should also note that if we manage to get below the 450 level, then we could also trigger another bigger bearish pattern, a March to date double top pattern. So please watch this space carefully. Kansas City wheat. Much as we have seen in other grain markets, the rise we saw since just before Christmas last year had formed a more than reasonable looking December 25 to mid-February 26 original bull channel. That prices broke higher from 12 weeks ago. I applied here, as I've done elsewhere, and I quote, "An old technical analysis technique, but one that I recall worked well in the grains during the start of the Russo-Ukrainian war, back earlier this decade, and that is doubling, tripling, or even more of bull channels." End of quote. Well, the tripled upper bull channel line capped the market throughout March, and I even drew a quadrupled up bull channel. However, by then the influence of these had diminished with time and distance, and a new pattern emerged around the 50% absolute Fibonacci line at 697 1/4. These pushes higher seem to indicate this market was further along in its development than, for example, Chicago wheat. This all being said, 4 weeks ago I said, and I quote, "Much like Chicago wheat, and also something I've seen in oilseeds and veg oils yesterday, brings to mind whether the whole January to date action, and in this case I would look at the whole mid-December 25 to date action, as one leg of a possible bullish halfway hesitation pattern." I think this is a valid case here right now at least, so I will put forward the following targets topside for such a pattern. Therefore, a primary target will be up in the 686 3/4 area, a level we have already reached, with a secondary harder to reach target X up in the 745 1/2 area. This looks good as a pattern idea, as long as prices can stay above at least the lower bull channel line of the doubled up bull channel, and ideally above the whole tripled up bull channel itself. End of quote. Early 2 weeks ago, prices finally reached target X, the secondary higher up, harder to reach target, and have pulled back down ever since, breaking down through what I thought might be the next pattern here, the sharper and quite acute mid-April to early May bullish shift pitchfork. This pattern was quite acute for a bullish shift pitchfork, and there is no second option for this pattern. So as I said last week, it is this or it is something else. End of quote. Well, it seems the market has chosen something else, and I will retire this bullish pitchfork pattern after this week. Additionally, prices punched down and through both the 50% absolute Fibonacci line at 697 1/4, as well as the 50% Fibonacci line for the 2011-2019 move at 1691 1/4. I commented on this possibility somewhat last week when I said, and I quote, "To all this, I now like to add the following. I suspect we may have a very short dated, made over the last 2 weeks or so, ever since the gap up in earlier in May, a possible descending triangle in formation. So far we have not broken out of it, but just in case, as it might run out in the middle of next week, I'd like to lay out some possibilities. Not targets, just possibilities. Thus, a break higher over the upper trend line, we have a primary possibility of a move up of 37 3/4 cents, a secondary harder possibility of plus 59 cents. Whilst a break below the small gap would have a primary possibility of minus 29.5 cents and a secondary harder achieved possibility of minus 59 cents. I'll be very interested to see how this pattern idea develops, and that's the end of the long quote. Well, it has been very interesting, as these possibilities on the downside of a descending triangle have this week become targets. The primary target X at 661 3/4, a target which we have reached, and which only has the green short medium moving average, currently 661 3/4, coincidentally, protecting it just about still, and a secondary harder to reach target X1 down at 632 1/4. Yet again, I'll be interested to see how this one develops. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.